Hello viewers, welcome to Shantishala, आपका wealth partner. My name is Aditya Shankar and today I have with me Mr. Aagam Maniar from Liquiloans. The topic for today's video is P2P lending as an important emerging exponentially growing asset class and the important role that Liquiloans plays in this journey. So hi Aagam, welcome to the show.
Thank you so much for the opportunity.
Thank you so much for taking out your valuable time. So we'll get right to it, Aagam.
True.
So P2P, as you know, has been around for a while. Since its inception in India almost a decade back, there's been a lot of evolution. But as far as awareness is concerned, it's still a very, very nascent asset class. So if you could just throw some, basic light on what this asset class is about, how exactly it functions, and what role does Liquiloan play in this?
Surely. So P2P, as you rightly said, has been there for a decade, but only the regulations came in, which is the licensing from RBI came in 2018. So there were players before that, where there were no rules whatsoever. Post which when regulations came in, there are very stringent defined rules. And these rules shaped up the economy for P2P segment, right? Where now today 25 license holders exist in the country. Not more than 7-8 have ever started business and few of them have become profitable. Somebody like Liquiloans. What Liquiloans does is the same old traditional format of lending, where you are lending to one to many, be it friends, families, relatives, or even in the caste. Now we have formalized this because in the erstwhile days you saw people defaulting.
Right.
But when there is a regulated entity in between, and now you can reach out to a large consumers that lend money, and in a regulated format also collect them back because you can have a collection mechanism. It becomes easier to get higher returns from the end consumer. So P2P started in a manner where people were giving out personal loans to other borrowers in the platform. But eventually we understood that good quality borrowers would never borrow at high rates because they would get easy access of credit from banks or NBFCs. And that is where Liquiloans stepped in. We said, can we get you the safest borrowers who typically don't want to borrow but have very high ability and intent to repay? We said the only way to get these borrowers was get them through the no-cost EMI route, which means these guys were not credit hungry, but they took a no-cost EMI through one of our service vendors where they just took in convenience. And we made actually money from the vendor, where the gross returns were nearly 24-25% plus, out of which the first come first return, from day one we've been 100% aligned. The first come first return of nearly 8 to 10.5% as we speak today goes back to the investor, before which we also don't make any top line. So P2P as an industry has scaled enormously. When we started in 2018, when the licensing norm was due, the overall industry was not more than 500 crores of assets. Right. Today, in last 6 years, the assets are nearly 10,000 crores.
Wow. So, still there is a perception, so whoever we reach out to and even with our partners, our business partners, the general perception is that although it's a linear return, a fixed return asset class, because it delivers substantially higher return than, a traditional FD or even a, high rated bond, there must be a high degree of risk associated with the underlying, wherever the platform is investing. So the first question that they always ask is that, is P2P an NBFC or it is just a platform which is, kind of bringing together lenders and borrowers? Second is, if it's not lending itself, then how is it managing to generate this kind of return, which is, with your safety margin, and we'll come to this later during the discussion. Even after the safety margin and even after the platform fees, how is it able to deliver, double-digit returns to its investors?
So, firstly, let me take the NBFC piece. Yes, P2P is a format of an NBFC. So, similar to you having a housing finance NBFC, a deposit-taking NBFC, RBI brought in licensing within the NBFC sphere, saying that P2P is a new form of NBFC, but had different rules and guidelines. Here, technically, every platform operates and facilitates a trade, where they source investors who want to lend to multiple set of borrowers. Parallel, they also source borrowers, right? Now, the good part is this matching happens either directly, where people want to come on some website and want to lend, where they find some borrowers because these platforms also source borrowers who want to borrow at very high interest rates. Yeah. So P2P as an ecosystem started this way, but that is not how P2P actually always works, because P2P is just an asset class. This business model where you are lending at high interest rates was a riskier model. Then we started sourcing safer borrowers. This could only happen when we followed the Bajaj Finance route, where we said, let's tie up at points of sales. We went to education partners, healthcare partners, home decor partners, where a consumer would typically go, want to consume a service, not even wanting a loan, but because of the tie-up, we would offer a no cost, where most consumers would opt for it. And then we would earn the subvention from the vendor, which is a sustainable model, without compromising the quality of borrower. So the business model is way different at the Liquiloans end. This helps us easily generate higher returns because we are not charging a very high interest rate to borrower. It's practically no cost to him. But because of the subvention, the gross yields are in the range of 24-25, out of which we can easily pass the first double-digit return to the end investor and still have enough and more safety margin to cover for any NPAs and costs.
So you mentioned that there is a clear regulation, there's a separate license as far as P2P is concerned. So now what are the guidelines which are clearly mentioned in this license or generally also with respect to risk management? What all does RBI enforce? What all does RBI suggest to P2P platforms so that the risks are within some predictable models and does not go out of hand?
So as soon as RBI issued the licensing norms, RBI made it mandatory that anybody who procures a license has to act as a facilitator. When any investor comes on the platform, in the erstwhile early days, up till December 2019, an investor could not lend more than 10 lakhs on the platform. This limit got revised up to 50 lakhs, and that's the max an investor can put across all P2P platforms at his PAN level. Additionally, a lender can't lend more than 50,000 to one borrower, which means over a point in time, if he adds more capital that he wants to lend, he has to mandatorily diversify. On the other side of the equation, when looking at a borrower, the borrower can't borrow more than 10 lakhs and the loans can't be more than 36 months. And these stringent regulations came in early in the day so that nobody went overboard or leveraged to take a higher return out. But with these, RBI have understood that the segment is growing. So surely there will be easing that will come out in the near future, but with a better rail guard.
Sure. So just to summarize, as far as the risk parameters are concerned, one is that there is clear regulation with respect to what is the maximum amount that a lender or an investor can invest.
Yes.
Right. With a net worth certificate and without a net worth certificate.
True
right.
that.
So it's 10 lakhs.
Yes. Anybody who invests greater than 10 lakhs or wants to lend more than 10 lakhs, RBI has made it mandatory that the investor has to showcase that his net worth is at least 50 lakhs. And that too, it has to be a CA certified net worth certificate.
Net worth certificate.
Only then can he lend more than 10 lakhs, but with still a max cap of 50 lakhs.
50 lakhs.
And be it an individual or even be it a corporate, the limits apply the same, which is 50 lakhs of PAN.
Then there are clear regulations with respect to how much as a platform can be disbursed to a single borrower.
Yes,
right?
absolutely.
Which in this case you mentioned was 50,000 rupees.
Yes, absolutely.
Right. And thirdly, there is clear regulation with respect to what is the maximum tenure that these investments can be about.
Yes.
It cannot be a 10-year product or a 15-year product. In fact, if I'm not wrong, you in fact prefer that the lending tenures are as short as possible.
Absolutely.
To manage risk. So these are clearly mentioned in RBI's guidelines.
Yes, the master direction on the RBI website clearly states so, and everybody mandatorily have to comply to the same.
Okay. So another thing that I wanted to discuss with respect to our numerous discussions with partners and their clients is that the first and foremost questions that most clients ask is there is already a very large and visible avenue to invest as far as fixed income is concerned. So there is reasonable awareness with respect to say equity mutual funds and SIPs, etc. And when it comes to a safe and secure avenue to invest, there is always bank FDs, corporate FDs, and there is a large tradable bond market also. So in this scenario, and there's a whole spectrum of bonds available. So if one is looking at a safe bond, there is a bond available. If one is looking at a higher risk, higher return bond, that is also available. So in this scenario, how do you position P2P as a product, and what are the different types of products which are available with Liquiloan, which are suitable and which add value to the portfolio?
Perfect. So Liquiloans has always endeavored to keep risk at the minimum.
Yeah.
Because when you're doing fixed income, the idea is to ensure, in the worst case, the principal has to be crazy safe. Over and above that, you always want to beat inflation, right? Because typically fixed income investments are done for the shorter term, so that you can achieve your short-term goals. That is where you'll never do equity, because equity remains volatile. So when we looked at safety, we said, let's understand what are the safest products available in the market, and can we make them even safer, where we mitigate all critical risks, where we ensure that there is no counterparty risk from day one. When RBI gave us licenses, it mandated an escrow trustee format, right? Which will ensure you're not lending directly on my balance sheet, so that I can't misappropriate.
So just building on this, sorry to button. So can you build some more on this mechanism? This is slightly interesting because we can almost draw parallels with how mutual funds work.
Yes.
They also work in a very similar model, and over a period of time, the awareness with respect to how a mutual fund works has increased. But can you just throw a light on how this is similar to how mutual funds work.
Absolutely. So RBI actually tried and replicated the mutual fund structure for peer-to-peers,
Right.
where they said an investor, whoever wants to lend to any borrower, will not lend on our balance sheets. They will lend to a third-party escrow bank account,
Right.
which will be managed by a trustee. Only once we approve a certain set of borrowers, or we like a certain set of borrowers, or the borrowers that are showcased on the platform are approved by the borrowers, then the instruction goes to the trustee. After showing them all the details, the trustee will inform the escrow, and the money will go out of the escrow to the borrower designated bank accounts. Again, the receipts of capital, which is EMIs, come back to an escrow from the borrower, and this money then flows back to the investor. This ensures that money never hits our personal or company bank accounts and continuously moves out of the escrow, keeping the money safe. Let's take an example here.
Sure.
If you are to lend to a large counterparty, let's assume even a AAA name, right? Erstwhile, we have seen a Diwan Housing, which was a AAA entity.
Yeah.
If you lend money to them, you lend them on their balance sheet.
Yeah.
Now, if for any stupid reason they misappropriated or had an issue, you lost that money.
Yeah.
But versus that, a Diwan Housing AMC, where investors invested, never lost money,
Yes.
irrespective of Diwan Housing not being in
Because the
existence.
money was not on the books of.
Money was never on the books of Diwan Housing. It was completely via an escrow and trustee. The trustee liquidated the assets when investor wanted a redemption, and the escrow essentially then paid out the money once it got it from the end security.
Sure. So that the whole process through which this goes is similar to MF. So why I can relate to this is that 15 years ago, 17 years ago, when we started our careers in wealth management, very similar questions used to be posed for mutual funds. So there was always a question, no matter how stupid it sounds, but there was always a question with respect to, अरे मैं रिलायंस म्यूचुअल फंड में इन्वेस्ट कर रहा हूँ, तो क्या रिलायंस अनिल अंबानी पे मुझे ट्रस्ट नहीं है, तो क्या वो मेरा पैसा लेके भाग जाएगा? So we used to counter it by saying that सर कोई भी पैसा अनिल अंबानी के अकाउंट में नहीं जा रहा है.
Agreed.
वो that is going, so there is a structure, there is a trustee, there is a AMC, there is a promoter, and not 1 rupee also cannot be taken out by Anil Ambani from any bank account, right? Which is invested.
Absolutely.
And so, although this was kind of assimilated by investors, but it took a lot of time for them to internalize it. So similarly, this also is something that we need to keep.
So RBI has been very, very clear, very, very conservative that investors have to be very, very safe whenever they are trying even a new asset class.
Sure.
So on day one, they built this approach of an escrow trustee. To top it, we said we'll add more layers of safety, where we will not earn a rupee of top line, no expense ratio, no fee, till the investor gets back his capital and his return.
Sure.
Which means if we are last in the line to make money, we have to ensure the investor makes money. Only after which we'll earn some revenue, hopefully, which will recover our costs and then help us turn into profits. Liquiloans thankfully has been profitable for the last 3 years with very strong PAT at crore levels.
Sure.
What we additionally did is, because we found the safest borrowers, average 700 plus in terms of credit score, typically taking a no cost EMI, we found that these guys were the safest credit that you could lend to, similar to how a Bajaj Finance would create a portfolio.
Sure.
And additionally, the biggest risk, even after getting the safest underlying, is not diversifying. We ensured that every investor who came on the platform, his exposure to even one single borrower is less than 0.5% of his allocated capital, so that the diversification is at least 5 to 10 times than even a diversified debt mutual fund, ensuring risks are at minimum. And then, because of the subvention, we could even cater and give better yields to the investors, making a win-win proposition.
Lovely. So let me ask you a question which is actually not very specific to P2P as an asset class, but generally to fixed income, right, through debt, and which is that in a once in a lifetime kind of a situation, right, and coincidentally in the last 5-6 years, many such instances have happened and makes us question a lot of things. And in a crisis situation which has never happened before, completely unprecedented. So let's take, say, COVID for example, right? And where consumer uptake kind of came to a halt.
Yes.
Almost at zero levels. Consumers were literally forced into not consuming at all. And whatever debt they had taken up, obviously since the incomes kind of dried up and there was no movement at all, there would obviously have been stress. Yes. The government also took some very proactive steps in terms of supporting the credit sector in general. But how did P2P manage, and how did Liquiloans in specific manage that phase? So I'm sure it would have been difficult. But
absolutely. So testing times for all. The good part is, because we were not lending at high interest rates, I did not even have to provide for moratorium, because the borrowers were just paying back principal. At the segments that we are in, upskilling education, largely online, ed tech education, even in COVID, was doing robust business. these businesses on an average grew at 30-40% CAGR. But in the COVID time, a lot of these businesses grew between 200 to 400%. Because where, as you rightly said, everybody was homebound, people started upskilling themselves, started taking new courses so that they can get a pay hike later when things become normal. Similarly, we were always funding into the healthcare segment, specifically IVF, where these segments continue to again be robust even in a bad time, where a lot of people plan kids. And these cycles are not cheap. They start with 50,000, 100,000, 200,000, depending on which cycle you are at. Thereby, when we were associated with segments which continued to grow even in COVID, we could manage to deploy capital well. And at the same time, because we are a platform, the discretion remains in our hand. How much to raise? In which scheme do we want to raise? Should we raise or not raise, right? Allowing us to manage ALM because we are not forced to take capital. So we always prudently raise capital when we thought that a certain segment is not working out. Maybe a lot of offline stores that we work with, right? Hair and skin treatment clinics, which were completely shut down. We thereby went back to the market saying that for a certain tenure, we will not raise enough and more capital because the capital that we raise would go to the escrow, and if we could not deploy it, it's not beneficial neither to us or the investor.
Correct. So just a related question. For example, banks as such have this concept of SLR funds or whatever, and they have to deploy a certain amount for a contingency situation, and also till the time there are deposits and there are no assets, there is no deployment. You can at least earn a minimum return keeping the bank's money in government securities.
Yes.
So since a P2P platform is not a bank, so obviously the SLR CRR norms don't apply to it. You can't really stop inflows people from investing into the platform. But however, the avenues can dry up, or at least temporarily.
Yes.
So you can see a phase where 3-4 months it dries up and there are not enough borrowers, but people are lending like crazy.
Right.
People are investing like crazy. How do you manage that ALM mismatch temporarily or in the long term? Because you have to generate returns. You can't deny somebody returns, but you can't even invest minimum amounts in SLR, CRR securities.
Absolutely.
And you can't even, in fact, because of the escrow mechanism, you can't even take out money to invest in liquid funds.
Absolutely.
So how do you manage that?
So when RBI brought in this escrow trustee setup, they were very clear. The escrow bank account is not even like a savings account, it's a current account. Does not even get me to earn savings return, which means we have to always be prudent. We always look at the demand on the other side of the equation and only then raise capital. So in early stages when we were growing, a lot of people only came and participated in a liquid scheme because they would not lock in their money. But we managed to take only enough money that we could deploy. So whenever the demand is less than 120, we would go ahead and raise and try and raise practically 90 to 100. Because never ever will be able to meet the demand. The demand is humongous on the other side of the equation. But let's assume demand was to dry up. And even if it were to dry up overnight, only in a situation like COVID, you will see that happening. But because we were in avenues which had inherent good strong demand, we continually kept on redeploying capital but did not raise fresh capital. So existing capital continued to get churned and redeployed and earn the subvention.
Stop inflows into some of these products also if there is not much demand on the other side.
Absolutely. So that discretion, the levers are in our hand. We actually went back to even our largest partner saying that because the money will remain idle in an escrow, because some of the avenues have dried up, we will not raise any incremental capital from investors for that period. Or else we could also go down, and we've done that. We actually reduced the rates which artificially curbed inflows on the platform. Thereby, we always manage ALM well. And over a point in time when people saw success, that they got back their capital, they got back their interest, a lot of people then eventually moved to the lock-in schemes because they wanted to optimize their returns. That is how we manage the ALM. Currently, we are on the positive side of the ALM. My average lending tenures are not more than 10-12 months. And more than 66% of our funds currently as we speak are in the lock-in products or practically longer liability products which are 12-month plus. Thereby, unlike a lot of large banks or NBFCs who face an ALM issue, we are very strong on our ALM and on the positive side.
And like banks and NBFCs have their collections teams, right? So to enforce payment by defaulters.
Yes.
Not really defaulters, but somebody who's delaying payments or interest payments or missing out on EMIs. So does Liquiloans also have a collections team which goes out and ensures that? But if it has a collections team, how does it work? Because see, technically you are not the lender.
Yes.
There is somebody who say, I am lending, I am an investor. Technically, I am lending. My money is going to say 1,000 borrowers.
Yes.
In very small amounts. So how do you as a platform ensure collections, etc.? What is that mechanism?
So what we told all our lenders is we'll help and facilitate collections, right? Although the onus is of the actual lender. Yeah. We said we'll always be aligned to the investor, always support them. So we built a 120 member collection team as we speak today, which does soft collections for the first 90 days, which would reach out to any and all borrowers, send them reminders, send them emails, send them SMSs, even call them if there was any delay in terms of NASH debits. If there was an issue, reach out again, understand, get the money back into the bank account, again hit the NASH and again recover the money. So all of that would happen in the first 90 days. Post which, if the borrower did not respond or did not pay up, these cases go to cash collection agencies, where they would essentially recover or try and recover the money on behalf of the lender, where they would take the end borrower to the Lok Adalat. They would reach out to their residences or their offices.
There is a clear mechanism.
A clear mechanism similar to a very large bank or NBFC to recover monies on behalf of the lender.
So Aagam, what is like the worst case scenario that you can see with your model? So a lot of practical things that you've already mitigated, a lot of practical problems that you've already surmounted. What are some things which probably carry a 1% probability, but which can theoretically happen?
Sure.
What are the risks that you foresee?
Right. So let's look at even the heavyweights or giants, so maybe AAA rated. They all run the counterparty risk, right? If a Lehman can collapse, if a Diwan Housing recently collapsed, if an IL&FS can collapse, you lending money even on a AAA balance sheet will have counterparty issues. Second, you have to look at the use case. Look at the borrower. Typically, we lend in the services segment. In most of the large NBFCs, when they even do a no cost, they are typically lending against consumer goods, right? Where somebody has a malified intent. Let's assume he paid 20% upfront. Let's take an example of a phone. Let's assume an iPhone worth 100,000 rupees. If he took a no cost, he paid 20,000 upfront, took the 1 lakh rupee phone home, and if he had a malified intent, he could sell this out for, let's assume, 70,000, 80,000 and run away and not pay. Although surely his NASH will bounce, it will be considered a criminal offense, his credit report will
go down.
Absolutely, the score will go down, but the fraud still can exist. But here, typically we are doing no cost in the services segment, where again the money never goes to the bank account of the borrower, gets disbursed to the vendor, but the vendor is providing a service which nobody in the world can sell, thereby limiting the downside, right? So that now, limiting the upside, so that the borrower now has only a service to procure, for which he's already paid a certain down payment, which showcases his intent and ability, and now he's paying via NASH, and his downside is again the same, similar to a large NBFC. His credit score can go down, criminal offense if the NASH bounces, which will restrict his ability to consume credit in the future.
Sure, understood. So what you're saying is that so the consumables in terms of physical goods, say consumer durables, etc., all of that is something that you avoid, and services like ed tech or medical tech, or these are the things that you focus on.
Absolutely.
Which obviously limits the downside of there being default.
Yes.
Just for the interest of the viewers, can you just explain how the zero cost loan thing works? As in, how does the maths work here? Because we have understood a lot of times, but still, once in a while, people tend to get confused. Ki, जैसे in Hindi, I can say that let's say I'm a college student और मुझे iPhone लेना है,
yes,
right? So iPhone will typically cost say 1.5 lakh rupees और मेरे पास नहीं है, but I can afford say 10,000 rupee EMI every month.
Yeah.
So and I go to a Chroma and I buy a iPhone on a EMI. So
yes,
how does so I know that the person who's buying the phone will benefit because मैं तो literally I'm affording a phone which I otherwise wouldn't have afforded.
Absolutely.
How is the seller say Chroma is also benefiting because उसकी sales बढ़ रही है क्योंकि कितने लोग 1.5 लाख का phone immediately lump sum देके खरीद सकते हैं इसकी sales. How does the borrower or the disburser in this case benefit?
So perfect. Let's take the example forward. Okay. Let's assume a simple number of 100,000. अगर लाख रुपए का प्रोडक्ट था, an iPhone था, let's assume Bajaj offered a no cost EMI and would have said कि आप 10-20% upfront भर दो, which is $20,000.
Yeah.
बाकी का 80,000 हम no cost में convert कर देंगे basis credit evaluation.
Right.
Let's assume a borrower got approved, he signed a NASH, and now in the forthcoming months हर महीने ऑटो डेबिट होके लेट्स अज्यूम नेक्स्ट 8 महीने में 10,000 करके वापस आना था. सो द बोरोअर टेक्निकली ऑट द आईफोन फॉर द सेम प्राइस बट नाउ विद कन्वीनियंस बिकॉज उसको 10,000 की EMI परवड़ रही थी, एक साथ लमसम 1 लाख नहीं परवड़ रहा था, तो उसको लाख रुपए की चीज़ लाख में पड़ी. पर जब उसने 80,000 का लोन लिया फ्रॉम बजाज एक्चुअली डिड नॉट पे द मैन्युफैक्चरर विच इज लेट्स अज्यूम इन दिस केस एप्पल फुल 80,000 बिकॉज बजाज फैसिलिटेटेड अ ट्रेड की वॉल्यूम बढ़ा के दिया, ग्राहक बढ़ा के दिए. नाउ बजाज वुड गेट अ डिस्काउंट. In old school bhasha, bulk discount, financial jargon called subvention. This discount Bajaj will deduct upfront. On an average, white goods में, consumer goods में 6 से 10% का मैक्स मार्जिन है।
तो लेट्स से 80,000 में से उसने 8,000 काट दिया, 72,000 ही वो एप्पल को देगा।
Yes.
तो 8,000 तो डे 1 पे उसका
डीप डिस्काउंट करके उसका गेन हो गया। तो अब उसने जेब से दिया 72,000, पर उसको रिसीप्ट होने वाला है 80,000 ओवर द कोर्स ऑफ लेट्स अज्यूम नेक्स्ट 8 मंथ्स, व्हिच इज 10,000 इनटू 8। नाउ 8,000 गेन हो जाएगा ऑन 72,000, व्हिच इज एन एब्सोल्यूट रिटर्न ऑफ 11.1%। बट द एनुअलाइज्ड रिटर्न is nearly 24-25. The reason for the number being 24-25 or higher is because जब हर महीने वो 10,000 वापस आ रहा था, बजाज would not keep the money idle in the bank account for the next 8 months. वो रीइन्वेस्ट करते जाएगा, वापस डिस्काउंटिंग या सबवेंशन कमाएगा, और हर कैश फ्लो के साथ ये होगा। तो पहला कैश फ्लो बेसिकली 8 बार हो रहा है, दूसरा वाला 7 बार, तीसरा वाला 6 बार, allowing the money to reinvest and compound, जो हिंदी में इसको चक्रवर्ती ब्याज बोलते हैं। The gross IRR is nearly 24-25%. And this Bajaj managed to do, or we do in the services segment, without compromising on the quality of borrower. And that's why it becomes safe.
So what you're saying is that Liquiloans basically does this.
Yes.
The only difference is that instead of there being an iPhone, it is replaced by something like a hair and skin clinic ka service, or Dr. Batra ka, homeopathic ka service. Something that you can't kind of sell to a third party.
Yes.
Receive money and default on your loan.
Absolutely.
तो या तो मैं वो सर्विस कंज्यूम कर रहा हूँ या कोर्स फ्रॉम अपग्रेड, तो या तो मैं सर्विस कंज्यूम कर रहा हूँ या आई एम नॉट, और ऊपर से मैंने शुरू में भी कुछ पैसा दे दिया, तो आई एम बाउंड लिटरली to consume that service and pay the money.
Absolutely.
So understood. So that is again a risk mitigation, technique. So coming to some very specifics, what is, if I ask you very bluntly, in layman term, कि मुझे Liquiloans कितना टका रिटर्न देगा? What is the bracket? कितने से कितना minimum, कितना maximum देगा?
So currently Liquiloans offers a bare minimum rate of 8% annualized, which is in the liquidable scheme. कि आज पैसा डाला, अगर मुझे 15 दिन बाद, 25 दिन बाद, 100 दिन बाद, up to 365, कभी भी पूरा पैसा या partially पैसा निकालना है, they can earn up to 8%. Then we have shorter term lock-in schemes, right from a 3-month lock-in going up to a 36-month lock-in, where yields surely keep on increasing जैसे जैसे आप tenure बढ़ाओगे. Then we have lucrative schemes even on a shorter end of the curve, जैसे 5 महीना, 10 महीना, and longer end where 30 months is practically giving 10.5%, which is the highest return annualized XIRR basis.
Right.
Plus we have a flexi lock-in scheme similar to how bank FDs work, कि आपने रेट तो लॉक इन कर लिया फॉर अ लॉन्ग टेन्योर, लेट्स अज्यूम 36 महीने का हमारा रेट है 9.25%, पर अगर बीच में लेट्स अज्यूम मैंने 10 लाख डाले और मुझे 2.5 लाख रुपए की जरूरत पड़ गई, लेट्स अज्यूम सेकंड ईयर में मेरे को विड्रॉल चाहिए, आई कैन श्योरली कम बैक एंड आस्क फॉर दैट विड्रॉल, बट वो 2.5 लाख रुपया मुझे 9.25 नहीं 8% पे वापस मिल जाएगा, और बाकी 7.5 लाख जो पड़ा है, इफ इट होल्ड्स अप टू मैच्योरिटी, विल स्टिल अर्न 9.25. तो प्योर लिक्विड स्कीम्स हैं, लॉक इन स्कीम्स हैं और फ्लेक्सिबल लॉक इन स्कीम्स हैं. इन्वेस्टर अपने मुताबिक उसका एडवांटेज ले सकता है.
Sure. And what is the taxation of the returns that the investor gets from the scheme? How does it work?
So good part is TDS नहीं कटता.
अच्छा.
Because और क्यों नहीं कटता? आप मेरे बैलेंस शीट पे पैसा नहीं दे रहे हो.
Right.
So as a corporate I can't deduct any TDS because I have not got your money. पैसा जा रहा है एस्क्रो के द्वारा बोरोवर्स को. रिटेल बोरोवर्स 10 ऑडिट में नहीं आते. अगेन वो TDS नहीं काटते. वो भी जब रीपेमेंट करते हैं वो एस्क्रो में आ जाता है. एस्क्रो कोई कॉर्पोरेट एंटिटी नहीं है, वो TDS नहीं काट सकता. उसमें से पूरा ग्रॉस इनकम इन्वेस्टर के हाथ में आ जाता है. एंड देन द इन्वेस्टर हैज टू डिक्लेयर हिज इनकम बेसिस द इनकम स्टेटमेंट्स दैट वी प्रोवाइड, एंड देन अकॉर्डिंग टू हिज इनकम टैक्स स्लैब, कोई 0 पे है, कोई 10 पे है, कोई 20 पे है, कोई 30 पे है, कोई 40 पे है, अकॉर्डिंगली फाइल फॉर देयर टैक्सेस. एज सिंपल एज दैट.
Sure. So overall, if I look at and if I discuss P2P as a segment and Liquiloans ka strategy in general, we are essentially participating in the retail credit story of the Indian economy.
Yes.
Right? Which has by far as the track record is concerned, has delivered very high risk adjusted returns as compared to lending directly to large corporates, where we have seen high NPAs because of a variety of reasons, because of downturn in market cycles, because of mismanagement, because of fraud and whatnot. And we have seen this a lot in the last 8-10 years. Whereas the banks and institutions who are focused on retail oriented credit, say HDFC Bank or Bajaj Finance, like we just discussed, they have seen good uptick. They have seen the consumer growth story, consumption story generally, kind of materialize in India. Which till recently was a laggard as compared to other economies like China, and and P2P platforms, especially Liquiloans, has been at the forefront of cashing in on that strategy.
True.
Right? So this is what I overall perceive about the P2P industry. As far as an asset class, P2P is very competitive, if I'm not wrong. If you see the spectrum of fixed income investments that are available for retail investors as well as HNI investors or even UHNI investors, generally it's above, say, a bank FD, corporate FD, even a liquid fund or a very basic debt mutual fund. Somewhere below somewhere below a high yielding bond, but then it has its own advantages, it has its own, and of course centricity stands for asset allocation in a multi-product approach where a portfolio should consist of a variety of instruments, not just one or two.
Absolutely.
So a Liquiloans, and P2P as such, and Liquiloans in specific has a very important place in all portfolio. Plus, as far as our partners are concerned, it also offers income stability and income hedge. So for example, I keep telling all my partners, we keep emphasizing on this part that if you are only mutual fund oriented, mutual fund focused, then we are in for tough times, because generally we have seen that the mutual fund industry is heading to, it's growing like crazy, and probably P2P will be in a similar situation, say 10 years down the line. The MF industry is growing like crazy. The regulator is looking to cut TERs like anything.
Yes.
So, if somebody had a 100 rupee AUM 5 years ago, the amount that he would have been earning would be literally, 75% or 60% today.
Yes.
So, if one has to maintain the income streams as a wealth advisor, as a mutual fund or financial product distributor rather, one has to look at alternate products, and P2P and Liquiloans in specific generally offers that avenue.
Absolutely.
Right, where it is beneficial for both your client as well as you also. It's a win-win scenario for all.
Agreed.
So overall, it was a very good discussion, Aagam. You covered almost all aspects of P2P industry in general, how it has emerged, what are the parameters, how it is regulated, what are the strategies, and of course how Liquiloans plays a very important role in the overall scheme of things. So thank you so much for coming in here, clearing a lot of doubts, explaining so much to us, and we wish to have many more such interactions in the future. And thank you so much, viewers, for taking out time today. Do like, subscribe the channel, and please directly get in touch with me or any of your RMs who would be in touch with you. If there are any further doubts, I'm sure Aagam would be glad to submit to any of your doubts if you have any. Thank you so much and good evening. Thank you.
Thank you.
Yeah.